Howdy, swings. Today is August 3rd, Saturday. As expected, the Fed conference results and July jobs report might not be great for the market. However, the market decline has been larger than anticipated, especially at the end of the week. Is the market heading toward a serious economic downturn, or will it recover next week? Let's check out Fullhapce's forecast for the weekly swing market. Swing trader's friend, Fullhapce Intelligence presents this week's market news for August 1st week. The VIX surged dramatically, while the Russell 2000, Bitcoin, and semiconductors saw significant declines. On the other hand, Treasury bonds and gold performed exceptionally well. S&P 500, 5,346.56, minus 2.06% down. Dow Jones, 39,737.26, minus 2.10% down. NASDAQ, 16,776.16, minus 3.35% down. Russell 2000, 2,111.9, minus 7.26% down. This week's sector performance. The market experienced a broad decline. Utilities and real estate performed relatively well despite the challenging conditions. Conversely, sectors like semiconductors, banks, small caps, high beta stocks, and big tech saw significant declines. The reasons: some recent economic numbers and earnings reports weren't very promising. Poor economic data affected recent market shifts, and disappointing tech earnings kept investors from putting money into tech stocks. This has left investors with fewer options for where to invest their money. About 79% of the S&P 500 companies that reported earnings beat their profit expectations, though this is less impressive than in the previous quarter. Only 47% exceeded revenue expectations, which is a bit below usual. This suggests that while companies manage their costs well, overall sales growth is slower and inflation might be cooling off. Things to consider. This week, there were several positive developments for treasuries, including a reduced borrowing forecast from the government, a dovish decision by the Federal Reserve, and some weaker economic data. Fed Chair Powell didn't confirm a rate cut for September but suggested it's more likely, as the Fed now focuses on inflation and employment. The Treasury cut its borrowing estimate for July-September by $106 billion to $740 billion and expects a further decrease in the last quarter of the year. Tech stocks experienced some selling, but several major tech companies reported strong earnings and positive future outlooks. Fed's focus has shifted more towards ensuring stable employment alongside controlling inflation. Fed Chair Powell hinted that an interest rate cut could be considered soon, possibly in September, but didn't confirm it outright. Market forecast for weekly swings. This week's drop was quite unusual and has been the quickest change in market sentiment since November 2021. We should keep being cautious because, as noted in the July 30th daily swing forecast, SPY hasn't dropped 3.1% in a week for 40 weeks, making it overdue. This drop might just be a normal correction after recent gains due to fear and may not necessarily signal the start of a recession. There might be some attempts at recovery next midweek after 3 weeks of declines. We may see a lot of up and down movement over the next 1 to 2 weeks. A strong rally might be coming after that, but it could be delayed until current fears subside. Here are some possible factors helping the market make a comeback. The term recession is being discussed more, but it might be too early to confirm one as the economy shows mixed signals, with manufacturing and transportation struggling while services face new challenges. Despite cautious consumer spending and varied corporate earnings, central banks, including the Fed, are beginning to reverse pandemic-era policies, and Kamala Harris is gaining ground against Trump, with speculation about her VP pick. Secondary scenario for risk management. It's possible, though less likely, that things could keep dropping for another 2 to 3 weeks without any weekly gain. If this happens, some people might see it as a chance to buy in at lower prices. Here are a few things that might be causing the market to keep falling. U.S. economic data points to slower growth, and the Federal Reserve's cautious stance raises questions about timely action. Microsoft, Amazon, and chip stocks have reported weak results, while various sectors face consumer challenges and struggles. Berkshire Hathaway is liquidating stocks and holding large cash reserves, and rising Middle East tensions have investors worried about potential Iranian retaliation. Conclusion: A big drop in the market over the last 2 days of this week might mean that any rally could be delayed for a couple of weeks, depending on how fears settle. Expect a lot of ups and downs in the coming weeks as strong buyers and sellers clash. It might be a good idea to avoid the big ups and downs in the market and wait for signs that things are getting better. We suggest that viewers consider both the main forecast and the secondary scenario to be prepared for any risks. Thank you for watching. Fullhapce Intelligence, the best investment partner for swing traders.